Yo, what's up? This is Noble. Welcome to Insider Trading. Oh, that was the wrong music. Wait, let me do that over. Yo, this is Noble. Welcome to Insider Trading. There we go. It feels better. I hope you're having a good Saturday. I'm having a real good Saturday. I'm a tad bit late. My second camera was acting up on me today. I love the second camera. The angle's dope. It was messing up today, though. I thought it was Zoom. Zoom be messing up other little programs. Y'all got to watch out for Zoom. It's probably why that stock price dropping. Wasn't a great investment. We could look at Zoom if y'all want to. So, what do? I love to help you guys see the market clearly. Think about your decisions. I want to help you make more money, play better defense. I don't care if you're an investor or a trader. What's your defense? I don't talk about defense enough. Everybody want to talk about making money. Making money is, I won't say it's easy. It's not. But every asset can only go up or down, right? It can only go up or down. Get the direction right, you're making money. But what about losses? How do you play defense right now in a market that is very close to doing something we don't want it to do, which I'm going to talk about. So, for those that don't know me, my name is Noble Woods. I've been trading for over a decade. I love futures. I specialize in futures, but options, foreign exchange, it's kind of all the same. You give me a chart, I'm doing the same thing fundamentally. So, Insider Trading is actually a group on Facebook that myself and my cousin Joel Harrison started literally like 10, 11 years ago. Thousands of people in the room, like 30-something thousand. I don't even know. So we love to do these types of really interactive sessions to give you guys a chance to interact with us. So go ahead and type in. Let me know where you're from. I'm in Atlanta, in A. From the Midwest, though, from the region, from Gary, Indiana. So let me know where you're from. Just type it in the comments. If you have any questions as I go through this stuff, if there's something you want to look at, if something I said didn't land, or you want to challenge me, that's cool too. Do that too. I can bag up everything I'm saying. I'll pop your name up on the screen like my guy right now. Got some folks checking in. Let's see. I got Andre Swanson, Shot Town. 45 minutes away from Chicago. What up? What up, bro? Glad you joined. Marco, my bad. Marco. What's up, Marco? Finland. That's great. I feel real good right now. I'm reaching people in Finland. That's dope. South Carolina. What's up, South Carolina? I just thought about South Carolina for a second. Haiti. Oh, wow. That's what's up. Thanks for checking in. It's good pressure. Not that I don't try to do my thing and cover the stocks and really talk about the market well for people just here in America. But, sometimes when you're reaching more people, it's just like, it's dope, So, appreciate you for being here. Florida. Quavis, what's up, bro? How you doing, man? Thanks for joining. Bridget out in Houston. What's up, Bridget? Somebody out in Connecticut. Okay. Oh. Brandon said, I can't even talk. What's good, big brother Noble? Where's the second cam? Bro, I said it earlier, man. Second cam faded on me. That's why I started late, man. Doggone camera. I like that second camera. VA. Virginia. All right. Fade the music down a little bit. All right, so what we here to do? I want to talk about the market. I want to show you. I got something up. It's actually right here. I got to get used to kind of pointing to the right stuff, right? So chart of NASDAQ. NASDAQ represents 100 of the best stocks in the world. It's an index. For those who aren't into this world, new. I know I got some folks who are always, same loyal folks who are always joining me or Joe whenever we do these. But for those that don't know, I always want to level set. There's thousands of stocks, literally thousands of stocks that you can invest in. There's money managers, hedge fund managers, with teams of analysts who put together the right mix of stocks, a tech stock ETF. It's called an ETF, an exchange traded fund, right? What the hell is an exchange traded fund? think of it like when you play Final Fantasy. I mean, not Final Fantasy, the video game. Fantasy football. What do? You pick your own players and put together your own little team to compete to try to beat everybody else, right? And if those individual players, it's kind of like being a hedge fund manager. You're not investing in one stock. You're picking with your analyst and all this data and research, right? You're picking, I want this stock, this stock, this stock, right? So there's people like what's her name? My cousin. She's not really my cousin, but I'm gonna call her my cousin. My white cousin, Kathy Woods, Ark over at Ark Investments. A ton of ETFs, right? RK, RJG. There's like 9 of them, right? So Nasdaq. I need you to know what Nasdaq is because Nasdaq is the best performing ETF for the last 20 years. Now there's like one that can beat it. One. Most people don't know it. It's cool. It's cool. Nasdaq's the one you need to know. Why? Because everything that you know and love is in it. It's heavy tech focused, meaning technology. There's different sectors of the economy, right? So it's heavy tech focused. But it's a broad market index. It's a benchmark. If Nasdaq and S&P is down, everything's down. If they're up and cruising bullish, everything's cruising. Every stock that is of value has good fundamentals, strong chart, right? The chart just reflects what the company really at the core, and it's not a perfect correlation, right? You got companies like GameStop and things like that were cruising, price is crazy, but didn't really have the fundamental business case to really say it's a great company, right? But you know all the great companies. You know all the great companies. We're gonna look at Amazon. We're gonna look at a couple different stocks today. Let me actually pull up Facebook real quick because I told people in my group what I always do. If you're watching this, you're not on Facebook, you're on YouTube. What I want you to do is go to Insider Trading. Facebook. Type in the groups, go to Insider Trading, search for it. It has like gold bars. Insider Trading. It's the only one. It's 27,000.5 members. All right. So let's see. What I do is I'll go on earlier in the day and say, yo, I'm going live, 7 o'clock. Give me 2 stocks. Let's go through the market. Let's see what's up. All right. So I got my list up. And Andre, you gave me Apple, Microsoft, ABV, Nvidia, QQQ, Spiders, and IIPR. You need to pick 2. You need to pick 2, man. You gave me like 45 stocks. I'm gonna start with you. I want you to pick 2. You gave me way too many. Way too many. I just need 2. Just 2. That's it. I'll be reviewing the whole S&P. The whole S&P if I do all those stocks. I love this little board, man. Love this board. Yo, this week in the market was depending on how much you know, this week was rough or this week was it made a lot of sense. It was sick. It was not even predictable, but you're aware of where we are and what this is. You know what to look at, you know how to gauge it. You don't get overly emotional. Everybody's long term is taking a hit. The market is pulled back 20-something percent. Man, so unless you and here's the thing about that. Let me hop over to NASDAQ for a second. I'm already on NASDAQ. I want to show this different. I'm gonna go to the S&P for a second. Go to the S&P. Take everything off my chart. If you don't know how to read a chart, I'm gonna keep it really, really simple. I'm gonna keep it really, really simple. Actually, I'm gonna blow this up for a second. I'm gonna keep it real simple. Oh, Brandon, yeah. I ain't mad at him for asking too. It's like, yeah, you might as well. Right. And I probably will try to circle back and hit him. Because I don't have a ton today, so I got you. Andre said Nvidia and IIP are cool. Okay. Let me go here. I want to blow this chart up for a second, make it bigger than me. And actually, let me take this off. There we go. Where we at? Bam. Okay, I need my name on there. All right. So what we're looking at right now is the S&P. Matter of fact, is this as far back as I could go? Max available. I want the max available. There we go. No, that wasn't much further. Okay, so the candlesticks is a way that investors and traders use these to read the actual prices. It's one thing to think Apple's a great company, to know it's a great company, but is there a right and wrong price? Is there a too high or too low? Is there a great, I want to buy low? Is there, I should be selling high? How do traders take more advantage of the market? Well, we need more than just fundamental information. We look at price action, is what it's called. It's the fluctuation of prices. It's bulls and bears. People who want Apple to go up and people who are like, man, I hate Apple, I hate Tesla. I want you right, who literally don't care about it, right? So those are the two sentiments of the market: bullish and bearish, right? That's it. You believe stuff is going up, you believe stuff is coming down, right? So these are year charts. What I want to show you, normally when I do this, I'll go to the week and the month, right? Why would I go to the week and the month? Let me explain something to you real quick. Let me do this real quick. I think this will. I think this will. I'm gonna go to a 4-hour chart. All right, look at this. 4 hours. What happened on Friday? These two candles represent Friday right here. This is Friday on the S&P. What happened? This little wick means price at some point pushed up during this 4 hours, and it's the candle's red because prices went lower. Red just means lower. Green means it went up, right? The next candle, which opens at 1 o'clock, we pushed up, we dropped, kind of prices pop back up a little bit, right? So we closed here, right? So those two candles. If I asked you and you're brand new, I asked you what was the trend on Friday, without blinking, you see two red candles. You like, well, from this little mini lesson, I think it's bearish because it's red. Yeah, true. So this is why I always start with higher time frames. I just want to hit this real quick because if we start talking intraday and you think you advanced, right? Now this was a great day. I mean, it was pretty much going straight down, right? So we got a little resistance right in here. I think we hit a pivot. We dropped to the next pivot, right? Matter of fact, let me check that real quick. Yep, right in here we hit the low of the previous day. Kind of just ranged there for a second. We pushed up. I tried to go higher, didn't have enough bulls. We dropped, right? I know my candles just changed colors, but don't worry about that. So this day, you can see it was down, right? But this is a 30-minute chart. Now there's more candles. All right, so there's more information. The analysis is a little bit more complicated because what should you have done right in here? What if I go to a 5-minute? All right, what if I go to a 5-minute and I want to go back to, all right, you can see the pattern a little clearer. Okay, up, down, okay. But right in here, let me put a little box. Right in here is where the market, matter of fact, I'll put little timelines. Right in here is where the market got a little, started to just dance around a little bit. If I go to the 1-minute chart, let me zoom back to the 1-minute. There's just a lot more candles to analyze, right? Was price going up right here? Oh, it dropped. Was it going up right here though? Right? Did this turn into an uptrend? Right? Why did I just do that? Why did I go from all these 3 different time frames? Just to show you, all right, if we're on the intraday, if we're day trading and I put it on the 1-minute, there's a lot of candles. All right, it's a lot of analysis. If I go to a 10-minute, there's even less. Right? If I go to a 30-minute, there's only like 14. And if I go to an hour, there's less candles. It's harder to be confused. It's pretty clear, right? If I go to a 2-hour, right? So that's why I generally tend to start on the week, right? That's why I always kind of start on the week because I want more people to make this simpler. And a lot of you guys get confused and you're off on direction. You're buying puts when the market is up. You're buying calls when everything is down. Why? You don't have a clear understanding of direction and price action and and things can change fast, but when they're down, they're down. We're down right now, right? Now, I'm not saying you're right for my options traders. I'm not saying you shouldn't be buying calls 6 months to a year, right? I'm not saying that. All right. But right now, what's the direction? We're bearish, right? We're down. So this is the week. The month still can see this really, really big uptrend pretty much after the recession, which was way back here was the recession. I'm gonna draw this little down up, this little V pattern. And then we were off to the races. All right. So this was a recession, started to recover, a little pullback, cruising for years, for like 12 years. If you missed the recession, as bad as it was, amazing now, but you can't go back in time and do nothing about it. That's the problem, right? We wait. Too many of us wait. Oh, when I get some money, when I get 6 figures, when I do this, when I get my money straight. We got a ton of reasons when and if, when every single day, equity, right? The market continues to make money without you, and it doesn't care if you're in it or not. Compound interest is a beautiful thing. All right, so I'm going to go to the year chart. This is the S&P over the last 20 years. Here's what I want to show you. Here's what I want you to see before I jump into your stocks. If I go back here, This is 2003. 2004 went higher. 2005, kind of tight year, man. Same basic stuff that happens on a 5-minute intraday week chart, right? What does this little candle mean? It's a smaller candle. People were trading less. Right? We weren't as aggressive, as excited. It wasn't as much volume. Next year was a good year, 2006, 2007. Ooh, whenever you see like a long wick, like look, like let me make this real clear. Whenever you see a wick that's basically longer than the body of the candle, that means somewhere in that candle, that year, the market was bullish. We were here, and there was a strong pullback. Right, the longer the wick, it's telling you something. It's telling you that one side is getting really weak. Right. So when we have a long wick on the top, it means that bulls who were pushing it up couldn't keep it up. No dirty jokes. Bulls couldn't keep it up. Right. Market needed some Viagra. Right. The market came all the way down. This is right. This is a little indicator, right? If you're reading this and you're somebody like me, you're like, you just pay attention to that long wick. What traders love to do is draw trend lines, right? Which is just connecting the bottom of this month with the bottom of this. I mean, the bottom of this year with the bottom of this year, right? So really, that was a trend line. And what happened? This was 2008, right? This was 2008. So in a simplified way, here's what I really want you to grab from this chart before I get to your stocks. To go lower, for prices to go lower on any time frame, it's so simple. Like if you get in a move and you're making money, and people are always like, man, I don't know when to get out. Well, if you're in and stuff is going your way, you got to pick a time frame and just literally don't get out. Don't even flinch. Give it time, right? We get really, really impatient when we're losing. No, I'm sorry. We get really patient when we're losing. Like when you're down in a trade, oh, you're the most patient person on earth. You giving it as much time as possible. You just hoping it works out. It turns around. All right. But when we're winning, or we getting an options trade that's winning, or we getting whatever type of trade, foreign exchange, you getting something that's winning, we be so ready to take the profit. And it's like, right. So I see that all the time. It's the reverse patience. We get really patient when we're about to lose because we don't want to lose. So we like, please, Lord, let this thing go back. Oh my God, please let Apple go. Please let Amazon go back up. Right. That's what some people right now on. Right. But when you're in your winning trades, you get out too fast. Why? Why? It don't make sense. Right? You literally have to just think about it very logically. It doesn't make sense. You should have more patience when you're up. Right? More, not less, more. Let me see. I got some comments real quick. Let me see what does somebody say. Oh, Christopher John said, how in the world I'm late? I've been waiting. Oh, my bad. Yeah, I started a little late myself, bro. And I said I was gonna start a clock. I already know this ain't. I said 45 minutes. I'm just gonna have to make Ozark's wait. Ozark is gonna have to wait. Godly. Christopher Johnson's in New Jersey. What up, bro? Glad you could join me. So here's the very simple. Let me take this little trend line off my chart. And this is literally what traders do. We just drawing lines on charts and adding little pretty colorful circles and reading. But there's a lot of math, right? There's math behind the indicators that traders use. There's statistics. There's if you think about something like a simple moving average, 200 period moving average, what the heck is that? Buy signal for a lot of big institutions, shows kind of long-term health. Above the 200 positive, below might be a sign this thing is getting really unhealthy, right? The health of the company. It's just a line on the chart. I learned that in a forecasting class, getting my MBA, but they never connected this concept of moving averages, right, to the stock market. So I had something I could use and didn't really know it, right? So I just want to make sure as I go, I break these things down and give you the tools, right? So here's what I'm saying. This year went higher, this year went higher, this year went higher, this year went higher. Right. If this was literally a trade on the 1 minute or the 30 or any time frame, Noble's not even remotely panicking or worrying, right? And that's where the emotional discipline comes in. But you really don't need to worry when the trend starts going your way until what? Until we break the low of the highest candle, which was right here under this candle. Small candle, longer wick. It was kind of saying something. Now, price could keep going. But clearly, what happened is this right here. We broke that low. Oh, let me go back. We broke the low of this. We crossed over that trend line. This right here, these 2 bad years, which was really like about 18, 19 months. This was the recession. I point that out. Why? Because I want to draw that box. I'm going to just leave that here. All right. And then what I'm gonna do is I'm just gonna write real quick on here. I'm gonna write recession. Recession 2008. All right. So that was a recession. All right. What happened after the recession? Let's go candle by candle. What if you kept buying? What if you kept investing? Go back for a second. What if you kept investing in the S&P, Apple, Netflix, whatever, right? Strong company, good fundamentals in Nasdaq, S&P, or the Dow Jones. Why? Because that means it's a really good company. The best stocks in the world are in the indexes. That's the secret. All right. Some of y'all, some folks, you done heard about this company from your cousin, and this one you heard about on some little infomercial at night that's supposed to be up 8,000% in 2 years. Never happens. They're just selling you. You already know the best companies. On some level, it's so easy. People don't believe it's that easy. You already know the best companies. I don't know. I don't care who you are. You already know the world's greatest companies. Now, maybe you can't differentiate and get into like the fundamentals of telling me, okay, what's the difference between, I don't know, Tesla and Lucid, which really ain't no competition. They both EVs. So oh, shoot. Man, y'all all in my business right now. If somebody got to come and talk to me, that's a special ringtone. Let me hurry this up so I can I can call her back. What the heck was I saying? Oh, let's say you have you were buying great companies through the recession, right? This was the bottom. This was the bottom down here. I'm gonna just put a little box, right? This was the bottom down here. 2009, market starts to recover. Right? 2010, cool. 2011, oh, tight lows, tight year. All right. Look at this. 12 up. 13. Oh, we cruising now. Why was 2013 so strong? I'll tell you why. Because we got back above the high. We got back to the high. So you need a lot of volume. This got a lot of people excited. Oh my God, the recession was so bad. 4 or 5, 6 years later, we're so happy. Right? We're so happy. Why? Because the market recovered. This is a basic recovery. Right? This was the low. And it's just, think about it like this. It's like a temperature, right? Like I don't know. Let's say this was your credit score. Let's do that. Now, credit scores have a different number, but whatever, right? Let's say your credit score was 157. You start messing up, man. You're messing with some woman who just, oh man, she want to go everywhere and yo dumb, but you just paying for all this stuff. She ain't invested in you. You investing in her is just a recipe. You putting it all on your credit card. You're not saving. Oh, your credit score because you ain't paying them bills. And then when she leave your butt, you got depressed and you down. You ain't paying your bills. Your credit score came all the way down to 67. Right? If I was your financial coach, how do I know you're back? Well, we got to get your credit score back up to where it was. We got to get it back to 158. Now we can take off, right? So this is recovery. This is like, right? Market took a hit, but it recovered. And then what happened? This is 2013, 24. Oh, I can't even see 2014. Look at this. Here's 2014 went higher. 2015 went a little higher. 2016 went higher. 2017 went higher. This should offend some of y'all on some level. Like, I don't know what it's gonna take to get you. I don't know what it's gonna take to get you interested in investing in your own future. I really don't. Oh, this is 2017. This is 2018. Candles red, but we still made a higher high. 2018 was Japan at the end of the year was having some crazy stuff. Their market dropped like 45%. I think Trump got impeached. Right. So okay, we had bad years, but that's one little bad year, and we're still going up. All right. 2019. Look at 2019. We shook off 2018 and look at 2019. 2020. All right. So check this out. Check this out, y'all. Look at this. What did I say? I said, watch the break of the lows of these candles, right? So the low of this candle was here. A little bit under 2018 was here, right? And a little bit under 2017 right here. We touch all three of those areas, right? That's all price did was retrace. All right. If I showed you on a different time frame, I could kind of show you better. But all we did was we pushed down. The market was really, everybody was scared. 2020. What the heck is this COVID thing? The market took a hit. We were all nervous, didn't know what was gonna happen, right? When that confusion, unknown really grabs people, oh, we sell. We buy puts on the S&P. The VIX, which measures contracts 30 days out on the S&P, options contracts 30 days out. That's all the VIX is. right? When everybody starts hedging their bets, when wealthy, rich people, like with just smart traders who know how to short buy, right? When everybody starts, the VIX spikes, right? VIX drops. Actually, I'm sorry, the VIX spikes went up, which means the market dropped really hard. And then we recovered really fast. Right. When we realize we're not gonna all just be dead, it ain't about to be, a zombie attack because everybody just gonna instantly, right? Now, a lot of people died from COVID. Rest in peace to anybody who's experienced or anybody who died. But if you've known anybody that, actually didn't make it, right, or hasn't made it, because it's still not over, right? My heart goes out to you. But the market recovered pretty fast. And then, y'all, 2021, amazing year. 22 though, look at 22. So here's where we are, right? And if I go back and just show you this chart, just this, right? The last time we actually pushed under a candle and stayed under, we tried during COVID. We kind of tested those areas, but if we look back here at the recession, this candle here closed, right? The end of that year, it was lower than the previous candle's bottom, previous candle's low, right? Which just means we broke a trend line too. That's kind of all it means, right? But this candle right here, so all of those people who were buying that year, as prices started to go lower, guess what? They're getting more frustrated. So here's where we are now, right? Still technically overall bullish, right? Overall, I mean, it's been an amazing run, right? Look at this. If I show you on a month, it looks a little better. Not even better, but just I'll show you on a month chart. You kind of really take it in, like, dang, you missed, like, y'all, you missed all of this money. Look at that, higher, little pullback, right? So right in here was COVID. This is the month chart. So we had 2 bad months, and then we came right back up. I mean, look at this. This has been amazing. Last 4 months, 1, 2, 3, 4, 5. Really, I just said, maybe like really what? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Really about the last year in terms of months, right? We have not been able to go any lower. Kind of bounced down here a little bit at 420. But as you can see, this month pretty much finally closed under all of these candles. It's not a good sign. Not a good sign. If I go back to the year, then what I'm looking at, one of the things I'm just paying attention to is, okay, what happens if we get all the way down here to 360, which can't happen? What happens then? Where's that trend line? All right. I could draw a trend line here, but that's too tight, right? So if I connect it, let's try to connect. Oh, you know what? NASDAQ. That's what I want to go over to. Looks better on NASDAQ. There we go. Same chart essentially, right? So this is where we are. All right. We take out this candle, meaning if this year stays down and we close lower than the last year's low, we're probably going to keep coming down and come back to this trend line. Right, which is way a ways. I'm not trying to scare you. I'm not gloom and doom. This is a if. Everything for me is like, what if? If this happens, then that'll happen, right? So if this year breaks the low, it's possible we could literally bottom at the low and then pop back up, right? And have an actually great year in 2023 or 24. It's right. We can go right back up. We can. But if we close lower, traditionally, usually on every time frame, when that happens, when a real strong uptrend starts to turn backwards, not even reverse into a downtrend, but just starts to like really start, pull back, kind of reset almost. You start to break the lows of candles and we go lower, and this month goes lower, and this month goes, we just come back down. And we usually come back down where? To a trend line that any and everybody who's a smart investor or trader should be paying attention to. All right, so we're inside of last year. This year is inside of last year. We virtually didn't, this whole year has been red right from January. We didn't even try to go up. All right, so different year. Definitely a different year. I hope. Here's the tough part. If you just started investing, right? You just started. The point is you started. I tell people all the time, I'm like, start. Too many of us wait on some perfect timing. We wait on when our money's right. Traditionally, African Americans, I know the stats. Y'all know I love doing the research and the stats. Ariel Schwab did a research. They do a Black investor survey every year. Years ago, I'll never forget this. The one I read said that African Americans, black folks in this country, generally start investing, getting serious about investing when we make six figures. That's when it happened for me. Now, luckily, I hit six figures before 30. And so it's like that's one of the key indicators that you probably would be a millionaire if you can hit six figures before 30. All right. Uh, Dr. Dennis Kimbrough, you got to read his book on black millionaires. There's a pattern. There's patterns to like becoming a millionaire. There's very clear patterns. Degrees, how much you make and how soon, how many cars you have. There's patterns to all this stuff, right? So we generally start to get really serious about investing because of income. White Americans generally start to get really serious based on age. What's the magic age? Guess. What do you think the magic age is? All right. What's the magic age for white Americans in this country? When they just, something happens, it's like, okay, it's time to get grown. We're grown. We got to start really putting money away and investing. Like, what's the age? It's 30. You might have thought it was earlier. You might have thought it was later. It's 30. And here's the scary part about that. For us, and I gotta speak as a black man, right? I got students who literally, there's people in here from Finland and right. So I teach and love teaching anybody who wants to learn. Right. That has nothing to do with race at all. That's my passion. It's my gift. I love teaching. I love helping. But we got a very unique history in this country. We have some very unique cultural ideas that I think we need to work out of Black America. All right, we got some things that are good and some things we need to, if I could put us all in one room and close the doors, we'd address some stuff. Because this money thing, we making it so much harder than what it is. All right. Have you been investing every single month since the recession? Have you? That's the question. Because if you haven't, why haven't you? Right. I know it's a lack of education. I know. That's why I do this. I know. Part of it, though, part of it also is I think, having a very, very just, honest conversation with ourselves about, how we spend. How we spend. Right. Because if we go back, and I do this in all of my consults, I'll go back. I got the little calculator. I go back and basically tabulate. And I'm like, how much money would you just save since the recession? If you knew better, you would have done better. You could have put in the market. I've had people tell me, man, I think I could have squeezed out a little $50 every month extra to put into the market. Usually people hit me with 100. It's just like a round number. It's so predictable. Everybody says 100. I could have put $100 into the market. I've had some people to be like, yo, I've been doing really well. Like I could have been putting like 1,000 in every month, 2,000 every month. I just didn't know. And I mean, everybody across the gamut. I talked to everybody. I've talked to people who just got out of college. They was like, wasn't even, they was babies. They was like in high school in the recession, right? To people who are doing well, 6 and 7 figure folks who just don't really know nothing about investing. Like, I think we think just because you're a doctor, lawyer, you got like a certain level of like certain type of degree profession. Nah, nope. And I met some of these like internet guru stars here in Atlanta. And I'm like, yo, you investing? Crickets. No. No, man, I'm like, right. So I'm not specifically picking on nobody across the gamut. I don't care who you are, race, color, creed, but specifically with us, because I know black folks. I know black men specifically because I am one, or I should. I should know what I am, right? Um, yeah, we got to get more serious. We can't wait until we get hit six figures. We just can't. Why? Because only about 5 to 6% of us make six figures. It's not a lot. We got all these, and we got all the. I know we have all the celebrities. We got, but social media fools you, man. There's only like 5 to 7. I've seen five. I've seen anytime I've seen the data, it shows like 5 to 7, 5 to 7%, six-figure income annually, 5 to 7%. And if that's the key, that's kind of like the trigger that turns people on to like really say, man, I got to get serious. Now I got the money. Let's hit it. Let's get it. Options, Let's get it. Let's get more serious now because I have the money. What does that mean? Because that means 93 to 95% aren't gonna get that switch. Right. So it comes from family, it comes from right internal forces, that uncle, your mom, seeing your mom talk about stocks. I love, love, love. I love nothing more to see my parents talking about, and I know they're engaging with their kids, talking about the market. Because I didn't see my mom or dad talking about stocks growing up. It didn't exist. I just remember seeing tickers, little ticker symbols going across the screen when we watched the news. For years, I never knew what those were because they didn't know what those were. Right. So let's see. My guy Quaver said almost 50K in 2 years and I'm lost. Oh yeah, we need to talk then. Cause this literally has been like, it's legit been the best. Like, let me show you this real quick. Let me show you this real quick. Show you this real quick. Let me take that comment off the screen and let me show you. Show you this real quick, bro. If I go to the month on NASDAQ, right? I'm gonna go to the month chart. All right, then peep this. This little trend line almost like it literally shows you like, I mean, if we went back to like what geometry, algebra, it shows you the how steep, right? How steep this incline. All right. So this was the recovery, nice and slow and steady. If I put a trend line from here to here, it's a little higher. Right. But if we go here to these last 2 years with COVID, look at that trend line. Look at how steep that is. Like, look at the way the angle changed. This is what I don't even know. Was 90, man? I need a geometry lesson. This is like, I don't know. I'm gonna make up numbers. This might be totally wrong. Let's use time. Okay, this is like if this is 12, this is like 3 o'clock. Right on this move here, this is like 1 o'clock. This one, this almost is almost pointing straight up. Like, y'all got to realize these last 2 years, if all you knew how to do, was just buy some NASDAQ every month, just like how you pay your bills, you pay your mortgage, you pay your car note. That's equity. It's value. It's value. Now, the problem is if you just started in the last 2 years, right? So that's great if you just started. But imagine if you went back 5 and just did that. Imagine if you could go back 10 and you just did that. Right? It's time. It's time. Time is the asset. Time is the valuable asset. That's the asset that we don't take advantage of. Right. Let's see. My guy Charles Holland said, I'm learning what to do I have now. So when the money comes, I know how to manage it properly. 100, 1,000, 10,000. It's about scale. Yeah, I love that. Love that. I totally agree. You can always do more. You can always do more, make more. You can always get more advanced. Like, let's be real. I'm gonna be real with y'all. I'm gonna be very real with y'all. Like, once you get to options and you take a year or two to really get cemented in it and you feel good about your strategy and you've learned, you've taken one of my classes or from whoever's class, right? You understand in the money, out the money, calls, verticals, puts, singles, you know how to look at internal volatility. You understand the Greeks, right? You can pull up a chart and pretty much be really specific and tell me how to identify something's in an uptrend, a downtrend, or reversing. You can show me where you generally enter every time, like clockwork. It's just a process and a pattern. All right. So you're doing the same thing over and over on different stocks. All right. If you can do that, there's no amount of money you can't make in the market. It's like this is it. This is that thing. This is that thing. I see videos all the time on IG. There's people and I don't want to I ain't trying to smash nobody's business. But there's all these things people are teaching and trying to learn. And it's like this literally is the money industry. This is the billionaire. This is it. Like, you want to make money, but you don't know about this. Everything else comes secondary to this. This is literally the world's economy. Right here. And the crazy part is you could just master NASDAQ and trade options on NASDAQ, long-term investing by NASDAQ. And if you ever got as advanced as me, you could day trade NASDAQ futures and be good. and literally be good. And you're trading the best index in the world. You can go either direction. You can make money when stuff comes down. So let's go to the charts. Let me hit some charts. I'm gonna hit some charts. Let's see. So I'm gonna hit he get Andre gave me, what did you have, Andre? Nvidia and IIPR. Okay. So Nvidia semiconductor, responsible for a lot of the chips that go into a lot of the technology. I'm on a month chart. Ooh, this is bad. Right. This month right now, just basically think about that. Let's think about that for one quick second. Right. Price is here. Right. If I stretch that across, that means anybody who bought during this month, right? They're now losing. Why? Because this price is lower than the bottom of all these candles. So regardless of when you got in, it doesn't matter. You're down. If you got in 1, 2, 3, 4, 5, 6, 7, 8 in the last 9 months. So what happens when people are down? They start to take some shares off. They start to pull back on their positions. They start to put money in something else, right? Some people just hold on for dear life, right? And it's a great company. They're still bullish. They're just, it's a lot happening with the supply chain, but I mean, as the market goes up, Nvidia was killing it, right? So it moves a little faster. Its beta is a little bit higher. Think of beta as like it's like the speed, right? So it's like the standard S&P is 1, right? So think of it like the S&P moves at 100 miles an hour. This thing, Nvidia, is like 1.8, so it's going 180 miles an hour, which means you can make or lose money faster because it just fluctuates faster, right? So let me go to I'm gonna jump down to the week. So let's look at this right quick. Look at this real quick on the week. So here's the level. I mean, this is what everybody was watching with this last downtrend here. Right? Everybody was watching this. Had a little drop in the pop. Oh, are we going back up? Nope. All right. Pushed up here, came right back down. Right. Week charts, right? So you're starting to see some support. What is support? It's just wherever these little bottoms I'm drawing, these swing lows, these lows where price pivoted. We sold down to this level and then people start buying aggressively and it pushes price back up. Right. So that level was like 210. We're lower than that now. Ugh. Whenever we break those levels like that, oh boy, everybody's watching these levels. Well, I say everybody. Everybody who knows they should be. Right. So where's the next little level? I just look straight across and try to find bottoms that make sense. Right in here for 2 weeks, we sat there. These 2 weeks, we sat there. We're close. So now we're pushing down 180. Just kind of always go to the next round number. Keep it simple. So we're almost at 180. If this stock doesn't turn around, if something positive doesn't happen, right? I'm probably gonna say the same thing on every stock. You already know, right? Really, all you can do right now is if you don't know how to buy puts or short, you should probably be learning that right now. One, it's more advanced, but it's really in these markets all you can do, right? And so, what is shorting? You can make money when prices come down. Yeah, you can make money when prices come down. I know for years, I'm just like y'all. For years, I didn't know. I didn't know. Those commercials you see late at night with some kind of investing scammy looking product, but they say this key wording. They say something like, our clients, or we show you how to how to navigate any economy, or it's always something about navigating, or like we show you how to play defense on any economy. What they're really saying is we teach you how to short markets. So when things get very clear that they're down, just like when things are very clear that the trend is up, you go with the trend. When the trend changes, most of the time over the last 12, 15, 20, 100 years, it's been bullish. But when it changes, everybody loses their mind. They lose their mind, and people but the people who know and who can read the charts and like are disciplined, and you literally don't, as a trader, it really don't matter whether the market is up or down to me. I'm literally gonna do the same thing. I'm just gonna go with direction. Now, as an investor, right? Yeah, I clearly want the market to go back up. Clearly, of course. Trader though, trader me is different. Futures trader me, oh, I love bad days. I do. I hate to say that, but I do. Right, because those sell-offs be really bad and hard and fast. Right, so it's fast money, and of course the bullish uptrends can be that too. But you know, so just kind of explaining. Let's see. Christopher John said all of my positions are down since I just started. Yeah, see that's the thing. It's timing, right? That's all. You just unfortunately you started um really when the market had a 2 year, 18-month run, started to freeze, got stuck. Now we're starting to see prices coming down, going lower. We're seeing some of the biggest, best stocks in the world. Netflix, Amazon, some of these stocks are down 30, 40, 50%. Right. So, I mean, let me do this real quick. Because I think Charles, you might know my indicators I like using. The squeeze is bearish. We're under the 8 period moving average. We're under the 20. We're bearish. That's really all I can say. um, I mean, I could get a, y'all know me. I could look at this joint on the 15-minute, the 4 hour, the 30-minute, any time frame. But to keep it simple, direction is down. I think most of it is that. If you're right on direction, then okay, as a trader, risk to reward, where do I get out? Where do I want to enter? Yeah, there's some very specific things you need to know, but if you get the direction wrong, right, you're done. So right now, man, Nvidia is, it's taking a hit. It is. Matter of fact, let me do this real quick. Let me look at the VIX for y'all real quick. So here's what's good. Here's what's good. See these lines I got drawn? It's been on my chart for months, for weeks. Literally, I just keep adding to the VIX. It's like literally a super long. I just keep adding stuff to it. I don't take anything off the VIX. Like meaning my what I draw on here, the things I point out. I don't take none of this stuff off. I keep it. I'm gonna keep it on here for years because I'm just tracking. Right, this is what real traders do. What am I taking this stuff off for? Right. So what do you see? What do you notice? Right. We had this spike here, 121, 221. The VIX spiked up, which means fear was really high. When the VIX spikes up and goes really high, it's a little trick. There is a trick. So don't take this as a rule, but I'm gonna say it in general. When the VIX goes up, when the VIX goes high, it's time to buy. And it's a little cheesy. I've heard other people say it differently, but there's a caveat to it, and I can't explain the whole thing fully. But if we have low volatility, another way to say that, yeah, I can say it. But it's like if you don't know it, yeah. So you got to keep watching these. That's what I'm gonna say right now. You got to keep watching these. I'm gonna say it for my folks who know. If you don't know, this confuses you. Just got to keep watching. You just got to go to my YouTube channel. You just got to watch more of these. Right? That's all. You got to watch more. Right? The squeeze. See how the squeeze down here has these red dots? That's what you want. When we have those really big spikes, usually we come right back down. Right? It's telling you that even the way it literally is measuring the VIX, the red dots kind of mean that this thing is not going to trend. It's not just going to keep cruising. Now, here's the thing: these are red dots. We're almost back to this same area, right? If I literally showed you 221, so we hit this level of 221, which was like 37. We had the red dots, which means it should right come right back down, which means the market should go up. That was 221, which was the same level that I had this line at 38 drawn on here for literally for years. I've had it on here, right? So we bounced back up. So 221. Let me go back to NASDAQ real quick. The week of 221. Where's the week of 221? It's right here. All right. Or a better way to do it is it's this candle, right? That made a new low, but also, right, kind of started this buying. Right. So when the VIX spikes, think about that. The VIX was high. VIX was back up. This is when the market made a low and pushed back up. So when the VIX went high, some people start buying. Right. We have now gone under that low. Right. So we're a little bit lower now on the VIX, right? But we're not as high as this area. So what does that mean? That means probably the market has some more room to go lower before we get a surge of buying to push it back up again, even though the market right now is down. Now here's the tricky part. Here's the tricky part. I'm gonna go back to COVID. Here's the difference. During COVID, oh man, this thing was just cruising, going higher, 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 which means the market was getting beat up, going lower, 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 and lower. Why? What was the one little difference? These little dots down here, now they're green. Oh, oh man, boy, I'm gonna keep moving. If you ain't if you ain't get that, I just taught you something. I literally just told you how to tell the difference between buying a dip versus nah, bro. This ain't no dip. It's going to keep going. We're full out recession, bearish, COVID mode. Ain't no dips to buy. I hate when people say buy the dip because it makes sense generally. Yeah, I agree with the principle, but there's also a certain time when you really technically don't want to buy the dip if you think buying a dip is expecting a quick bounce back up. Right. I think I started with the month, clearly, the month and a year, clearly to show you if you just keep investing, even through these down periods, even during the recession, if you just kept investing month after month, years later, you'd have been fine. You'd have been like, recession, that was the greatest time of my life. Right. But when it's happening, it's bad. 3, 4, 5, 10 years later, but that's investing. It's not about what's happening this month. All right. Too many of us are just all we can see is this month. I'm thinking like, man, where am I going to be 20 years from now? 10, 15, 20 years from now. That's what this is about. You're building equity. You're building something. Think about that. Anything you've ever built, you started brick by brick. And it took time to get the full. Right, if you want to build a house of wealth, you ain't gonna build a house of wealth in a year or 5 years or 10. You're not. Nobody gets to jump over that. Yeah, there's exceptions, right? But at the core, it takes time. And clearly markets, they work. They work. They do. Compound interest is amazing. They work. They really do. So let me hit some stop. Let me hit some more. That was Nvidia. Yeah, down. Could go a little bit lower. I showed you guys the VIX. The VIX has not jumped back up to where it was. Right. Let me show y'all that one more time. All right. So these last few months, the VIX is kind of, right at like 38, where we kind of, found a bottom, right? Buyers started to get back in. Could we go higher? Yeah, we could go higher. And the higher we go, the lower the market will go. Right. So it's tough, right? It's tricky. It's like when it goes up, right? Do you buy or do you wait? Like what you said is confusing. It's contradictory. No, it's not contradictory. If this squeeze is red and it's popping up, it should come back down. High probability of it coming right back down. Great place to buy. Buying the dip. That squeeze turns green, which means it has unlimited volatility, which really is just, I don't want to get into it, but it's Bollinger Bands, Keltner channels mixing, right? The average is kind of expanding. Oh, we could go lower. Yeah, we can go lower. We definitely can go lower. IIPR. Look at IIPR. On chart pulling back. See the details. Look at this on a week. Let me take all of this off. IIPR. So here's what I see. All right, let me go to the month, back to the month for a second. Here's what I see happening on a lot of stocks right now. Y'all ain't gonna like this, but it is what it is. Look at this. This pre-COVID high. COVID was this month right here. That was the low of COVID. The pre-COVID highs, we are basically about to test. We're about to do that on a lot of stocks. All right. Show you Netflix real quick. Netflix, pre-COVID highs were back here. When we got there, why does that say 22? Why does it say 22? I don't know, whatever. What month is that? February? January. Look at this. When we hit this in January, when we hit what is that, like 425? I said it. If you literally go back and watch some of my lives, I was like, the next place we could go is back to this low before that. If we don't bounce, and that candle was so long, I'm just like, it's probably Netflix is about to pull it back. Right. And notice how I keep saying probably, because everything related to trading for me is based on probability. It's not Noble's gut. It's patterns. It's understanding how markets work, market sentiment, the psychology of bulls when they're losing, bears, pullbacks, all this different stuff. That's all it is. A lot of years of experience. That was easy to call, right? Because this candle was huge. Bad earnings. All you need is one bad earnings. We right back down. Right. Amazon. Amazon. I just did some little, my little quick research on Amazon. Let me actually put this on a clean chart for y'all. Check this out. This is Amazon. I know y'all didn't ask me about Amazon, but I'm telling you because you should know about Amazon. Two things you should know about Amazon. It experienced these dips about every 2 years. 34% pullback right now. Probably a little bit more. Let me see. This pullback is 36%. This one right here was 36%. COVID was only 26, right? So, right. Why would I look backwards? Because I'm trying to see what happened in the past. A lot of these patterns repeat. So it makes sense that we pull back 36%. We know we can do it. But if we don't find some sort of bottom, then this dip is going to be probably the worst. Potentially dip into actually, reversing into a downtrend. Now, I hope that don't happen, of course. But look at Amazon since 2009. Right, just 2009 to here. All right, look at that. Look at that. Look at that takeoff. Woo, that's beautiful. And when stuff gets rangy, and we start to range, meaning right in here, all of this period, price just didn't go anywhere. Y'all see that for like almost 2 years. We just really didn't go anywhere. Now 2,800 to 3,600 is going somewhere. So yeah, you could have made some money in there, but imagine just buying shares long term. You're buying some shares, you're buying fractional shares. You just spend $100 a month every month on Amazon or 50, whatever. Maybe you got 4 stocks, you're putting $25 into them. I don't know. You got to start somewhere, right? Right now, all that money over the last 2 years, it ain't made you any money because this price right now is lower. But that's just if you started in the last 2 years. Imagine once again if you started way back here. Right, that's the thing with the market. You don't have time to overthink it. Right? You don't have time to overthink stuff, but we do. Let me see. Oh, QQQ. I'm always talking about AMD. Look at AMD real quick. AMD. So look at where AMD is. Right. COVID bottom right here. Matter of fact, let me draw it this way. All of this bottom was right there. Pre-COVID highs were right here. All right, so see how January we came all the way back, just like with Netflix, but we tried to go back up. Oh, we tried, and then we just. So where are we going next? Down to 70. Why you say that so confidently, Noble? Like you know it. I heard this, I read that. Well, what about this? You got $1 million? We probably are going down to 70. Now I wouldn't bet my life on it, but I don't really like betting. I don't ever really want to bet. If I ever bet you, I ain't gonna pay you. I know that's like totally not being a man of my word. Betting ain't serious to me. I don't like betting. No, I wanna do everything I do in life. I want it to have some logical, rational reason. It makes sense that price will come down to 70. All right. So, and that's the month chart. If I go to the week, I mean everything's looking the same and we're not that far away, right? So could we start potentially to get some another surge of buying? Could we try to like change this direction, turn this downtrend into like a reversal, and then hopefully we get more? Yeah, but right now we're there. We're bearish. That's all I can say. Costco and Shop, my next two. Okay, let me take all this stuff off my chart. If y'all don't know about Costco, man, Costco's a great stock. Let me show you Costco on the year chart. Look at that. Look at that. Costco yearly. Look at that. Look at that. Matter of fact, I'm gonna go back here. All right, that's 2000. This candle, most recent, this candle right here is 2010. I'm gonna do it like this. I'm gonna go across slow. 2011 higher, 12 higher, 2013 higher, 14 higher, 15 higher, 2016. Okay, little doji, slow down. Right, that cross right? Price open where it closed. We got a little wick on the top, a little wick on the bottom. Price couldn't figure out. Market was a little confused. We didn't go anywhere though, right? So it's still in an uptrend. We didn't drop. It's just a candle that represents confusion. On any time frame, you see a doji, you should instantly think, okay, market's just kind of pause, confusion. All right. We went up the next year. What is this? 2018. Look at that long wick. Oh, 2019. Took that wick out. Crazy year. Look at 21. Oh, I'm sorry. This is 21. Look at that. And now this is 2022. Costco's an amazing stock. Whoever asked me about it, you looking at the right, are you looking at the right thing? Right. So Costco, because some stocks actually function well when things are down. Like your Dollar Trees, everybody runs to the Dollar Tree when the economy's bad. Costco actually is one of those stocks where their customers are literally the most educated and most affluent people in the country shop at Costco, Sam's Club, BJ, right? Those club class of trade. Why? Because we understand value. Value. I love going to BJ's Club. It's one not too far from my house. Why? I get the best value per price, per ounce, per whatever. It's the best prices. Yeah, you got to buy in bulk. It's more expensive, but no, it's actually cheaper. Jedi mind trick. It's actually cheaper, right? So these types of stocks, right? These are a weak chart, right? So think about that. Costco just 4 weeks ago hit a brand new all-time high. When at the same time 4 weeks ago, NASDAQ 1, 2, 3, 4, right? It was making a new little swing and going right back down, right? So stocks like Costco, literally, there are some stocks that just, even when stuff is bad, they kind of shake it off, right? Depends on the industry, depends, right? And it's practical. That makes sense, right? Smart people are even more concerned about value. We get inflation. It's like, yeah, of course I want to buy stuff that has a great value. Of course. Of course. Right. Um, Charles said AMD hit that 70. It's 2024 Leap City. Let me go back to AMD for a second. I forgot what Leap stand for. Just think of them as long-term contracts, right? So what he just said was, let me go to the month. What he just said was, yo, if we hit this area 70, he said he's going to buy options contracts that give him 2 years. He has 2 years for price to do his thing. And that's actually very smart because you're giving your contracts time, because it's a great stock, because when we work out these supply chain issues, these stocks will recover. Right. And here's the kicker. Over the last 120 years, when does the market get the biggest returns? The biggest returns come 3 to 4 years after the sharpest, steepest losses. COVID was a drop, sharp, steep loss of value. What's 3-4 years away from 2020? 2023, 2024. He was gonna give his contracts 2 years if we get down there. That's buying low. That's literally buying low. All right. How much has AMD pulled back from these highs? Let's look at that real quick too. Let's see. AMD is pulled back 50%. It's like, when you gonna buy it? When it comes down 80%? 90? Like, we be trying to time stuff so perfectly. All right. Options is a game of time and probability. The more time you give it, higher probability you'll be right. Especially if you're bullish on stocks that are bullish, that align with the broad market economy. And I told y'all AMD and NVIDIA are faster, have a higher beta. S&P, NASDAQ does well. These do really, really well. Right. So, good point. Great point. Like how you thinking. That's how an investor should think. That's how a trader should think, right? If you want to go out that far. Now, the problem is a lot of y'all don't want to go out that far because you need money now. You're like, no, I can't wait no 2 years to make mine. I need it today. I can't even give a contract 2 weeks. Some of y'all can't. No, I don't mean me. I mean you. Some of y'all can't even give a contract 2 weeks, let alone 2 years. All you doing is making it harder on yourself. It's a hell of a lot harder to call something, in the next 2 weeks, next week, even in this economy. All right. versus 2 years. That's a long time. Different level of probability behind the decision making. But then there's a time factor, and then there's an emotional component. Got to put it all together. How do I want to attack this game? What makes the most sense? Right. Let me see what else. Oh, what else I got? Shop. Shop ABBV. Shopify. Ooh. Ooh. Shop getting beat up. Let's see how far is that pulled back. Shopify has pulled back. 76%. Wow. That's a lot. Let's be real though. It really was not doing anything for a long time. Like if I go back here to these early, let me go back like this. Oh, I'll take that back. So it kind of depends on how. Okay, so it took a while to start moving. I'll say that. Right, we got to 100 here. All right, there's like a 90. I forgot the stat. It's like a almost like 80-90% chance if a stock gets to 100, it'll get to 200 in time. All right, so we got to 100 in August of 2017. We hit 200 March of 2019. So it took 2 years to go from 100 to 100 to 200. Right. COVID was here. Oh. Then we cruised up. How much did we go up? Good Lord. So COVID made a high of, we ran about 490%, 485% to be precise. And we just dropped 76%. Think about that. It took us almost 2 years to make this move, and we've retraced it in literally like a fourth or fifth of the time, 5-6 months. Right. So keeping it simple. We've already gone lower than the pre-COVID high. So where do I expect price to go on this? If I'm just eyeballing it, which is really all I'm doing, 300. Yeah, 300 makes perfect sense because the VIX has room to go lower, which means the VIX can go higher. Right. Big institutional folks ain't going, right? There's people waiting for certain levels to get hit. We at least got to wait till it go back to 38. Why? Because it keeps hitting 38. And that seems to be where we keep bouncing in this downtrend. Every time we bounce, the VIX is going up to 38. All right. So yeah, we should go lower, should get down to 300. If I go to the week, let me go to the week real quick. How far away is that? It's really not that far away. All right. So that might have sounded like a lot, but I mean, 1 week and we're there. So, y'all already can see what I'm thinking about this week. This week coming up. Now, don't get me wrong. Can we push back up? Yeah, of course. The market can do anything. Anything. ABBV. Market can do anything. Yeah. Ask me what I think. Yeah. Go with the main trend direction, which is pretty clear and easy to see right now. I don't even know how to say this. So I'm not ABBV. That's the name of this. Let me look it up real quick. I don't know every stock, y'all. Most of them. Let's check this one out real quick. Y'all can't see my screen, but I'll tell you what it says. Could make it where you can see it, but just do this real quick. Appreciate my guy. What up, bro? What up, bro? We gotta talk, man. What's up with you, man? How the kids, the wife, man? What's up, man? Christopher John said, "Stop attacking me." Nah, man. Nah, I am. I probably am, but you know me. Shoot, I'm just, I'm light and rough with it at the same time. I try not to, be like one of them real hard. Like my coaching style ain't Bobby Knight. I ain't Bobby Knight. I'm more like Phil Jackson. But Phil was winning championships with that Zen style. Excuse me. I was looking up ABBV. Beta less than 1. That means it's slower than the S&P. generally means it's really safe. It's right. It's less aggressive, right? It's less aggressive. $260 billion market cap makes it a large cap company. Profile. What the heck do they do? Oh, healthcare, industry, drug. 50,000 employees. CEO is Richard Gonzalez. Makes 7.42 million. Develops, manufactures, and sales of pharmaceuticals in the worldwide. That's weird. Someone who wrote that, they need to be fired. The company offers Humira. Oh, okay. A therapy. Humira. Yeah, okay. A therapy administered as an injection for autoimmune and intestinal Behçet's disease, and then a whole bunch of other stuff that I can't even really go through. But okay. Lymphomatic, let's see, geno something, pancreatic enzymes. Okay, pharmaceutical company. All right, so whoever asked me about this probably knows something I clearly don't know. All right, my job is just to read, pull up the chart. So let me do this real quick. I want to see what the year. Okay, so this stock hasn't been on the market for a long time. All right, hasn't been on the market for a long time. This is 2019. So we had a dip before 2020. Then we went right back. Check that out. We went to the exact same low. That's why I keep, right? These lows are important because sometimes all we do is go back and hit the same low and bounce. That's why it's so. That's why when I'm looking through these, I'm like, where are we going? Well, we're going back to that same low. Why? Because market's price loves to go back to lows. Now, will we go through? I don't know. I don't always know that, right? There's sometimes ways you can tell that it's so volatile, it probably will go through that price floor. But at least you know where it's going. Get on the bus, get on the bus and at least ride to there. You can figure out if you want to take profit and get out. But that fundamentally is that's the whole point of having these highs and lows. When directions change, you go with it to those highs and lows. I don't expect price to always break the high. But if you rode it up to the high and knew where the high was, you literally know exactly what to do. Intraday, swing chart, swing trade, it's all the same. Futures, foreign exchange, it don't matter. Right? That principle of retesting highs and lows happens on everything. All right, so let me go back to the month. COVID was right here, which basically pulled back to 60. Last swing low, bad. We tested 60. We held at 60. Okay, cool. We recovered. What I like is that stocks like this, I'm also paying attention to and asking myself, without saying it out loud, but I'm about to tell you what I'm saying out loud in my head. What I'm saying, yeah, you know what I'm saying. Is are these stocks, do they look exactly like in the indexes? Do they so I always start with NASDAQ. It's called a top-down analysis. If you can analyze and just focus on NASDAQ, it technically most stocks are going to look exactly like it. Now, not perfectly, but if NASDAQ is down, Nvidia, Apple, Amazon, all right, and Apple's right. Apple's a little different story. That's right. So once again, Apple's, the Costco's, some stocks don't get pulled down because they're just amazingly strong in any economy. All right. So I don't know a ton about this one. I really don't know too much about it at all, but I like that it's still up. And the last 1, 2, 3, 4, 5, 6, 7 months, they've been doing something right. Well, I don't know what technology they have coming out. All right. So I don't know. All right. I don't know. This is right. But definitely not in a downtrend. Right. Does not look like everything else. Right. If anything, we just pulled back. What percentage is this from the highs? We just pulled back about 20%. Right. 20%. Where was the last? Right. So we could get some right in here, could get a little resistance, or probably going back down to 130. So I watched 135 and 130. I mean, 135 and 130. Right. And then see, matter of fact, let me look at the day real quick though. Notice how I haven't looked at the day chart during all of this. Why? Because there's more candles. Price can change direction faster. A lot of folks who are not seasoned don't know the difference between the day chart changing direction and the day chart kind of like pulling back. There's a difference. And what's a pullback? Pullback is just, it's like we hit a new high, prices come down 10, 15%, maybe 5%. Right? That's normal. Why? Because people who, once again, like I just said, people like me, smart investors and traders, when we get back to the high or new highs, you also start to say, hey, Great job as a trader. Let me take some profit. Why? Because we just don't go up forever. You got to take some money at some point. And when a lot of people who have made money start to take some of those profits, and then some bears start to, right, it's like a little, it's like a baton being passed from bulls to bears. Bulls are making money. Okay, we don't let the bears. We're gonna give y'all a couple weeks. Right, a little pullback, and then we go right back up in quality, good bullish markets, right? Which is what we've had for like 18 months, right? So, let me just check something real quick. Let me check something real quick. Like, what the heck just happened to his chart? Yeah, 138, 130. I could see us going lower, even on this one. Although, right, it's not does not look like everything else, right? Has really been able to kind of survive independently, right? It's not matching up with the broad market, the in Nasdaq and S&P. It looks better than those. That's a good thing. So, and it hasn't been around for years. So whoever asked me to look at that, thank you. I like learning, picking up new stocks to just kind of pay attention to. Like, okay, all right. I don't really touch stuff if it's brand like new. I think that's new. But once again, I don't know anything about it. You might work for the company. You may be like, that might be your industry. You know what I mean? So invest in stuff you know. That's what we're supposed to do. Rolando Tate said thank you. You're welcome. I don't even know what you're thanking me for, but you're definitely welcome. I got a few more. I got some in here. Trying to find it. Oh, Google, Twitter, Google and Twitter. Google. What's up with Google? I'm gonna put a year chart. Look at Google on a year. 2009, 2010, 11, a little higher, 12, 13, we got a nice jump. 14, we had a little pause year. 15, nice push. 16, little pause year. 17, we pushed. 18, pause year. 19, we pushed. 20, pull back. All right. So 20, we dropped, pull back down to these same lows of the previous year. Y'all see what I'm saying? It's the same patterns happening on everything. I just showed the last stock I just looked at. 2020, when COVID pulled down, all it did was go back to the same exact lows. I think that was the previous month, though, maybe. No, maybe that was the last year. Yeah, I think that was year 2. Right. So there is like this. I know sometimes we can't see it, but trust me, if I could take y'all into the matrix in my head, a lot of these stocks are literally doing the exact same thing fundamentally. They just look different when you look at the chart. Like it's definitely like the charts are different, but under the hood, COVID just dropped a lot of these stocks back to the same low from the last year, and then they pop right back up. Right? You keep seeing that pattern. The more stocks I show you on this year chart, you're gonna keep seeing the same thing, right? So 2021 was really dope. Great year, right? Clearly, look at the size of this candle. So it'll take a while for us to get all the way down here. And if we get there, we probably just gonna come all the way back down to 1,000. So, all right, this stock, I mean, this is Google though, right? So Google's that's the week. Let me look at the month. So the month, I mean, just like kind of like Amazon, right? We had up here, we had a lot of just a lot of indecision. We just ranged. And unfortunately, when we start to get these types of ranges, right? When prices just kind of, oh, we at the top of this box, oh, we pierced it, oh, we popped back up, oh, we came back down. Like eventually we're gonna go one direction. We're gonna find true direction out of this confusion. Right. This is unfortunately, this is like those people y'all be dating for like 9 years. And you hoping it leads to this. Usually they just break up. Sometimes they get married. You get what I'm saying, right? Long periods of indecision mean there's no trend. We're gonna go up or down at some point. We getting married or we breaking up, right? We got to do one or the other. This limbo in between thing ain't working. We've been doing this for too long, right? Usually the woman is saying that though, but I mean it's a lot of mature men that no, I'll take that back because usually the dudes really solidify the relationship. Uh, Google. So yeah, so Google's pulling back right now. Where we are right now, just just made investors who got in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Last 10 months of buyers are now losing. If you only started buying in the last 10 months, you're now losing. Really bad month. If I go to the week chart, last 4 weeks been pushing down pretty strong. Right. If we did have some support here, we went straight through it. Right. Think about support as almost like think about support as see, black folks don't go ice fishing. I can't do cold. I'm African to the core, but um if you keep tapping at a floor, even if it's like solid ice, eventually you're going to break through. Now you may not it may not crack the whole doggone ocean, but you keep hitting at a floor, it's only a matter of time. We bounced off that area 2,500 1, 2, 3, almost 4 times in a market that was trying to, right? This stock kept trying to go bullish. We tried. Not enough buyers. We back down. Right. And if I look at the month real quick, unfortunately, we really don't really see any major support. Honestly, this is kind of ugly. Like right in here, we froze for a couple months, right? And this line right here was basically the bottom. This is under 2021. So unfortunately, these stocks that almost during these periods, right, was just month after month, high after high, but really no, just kind of eyeballing it real quick. I don't really see like instant support, which I've seen on virtually every stock. That's not a good thing. It's not a good thing. Not a good thing. Google and Amazon are also going to do stock splits. I think Google, Amazon, I believe Tesla talked about it. I don't know if it's confirmed. So the price will change, which will be great because more options traders or people like me are going to be more excited about trading Amazon and Google. But and then stocks, shares being a lot cheaper, just really is it's like a Jedi mind trick. It's the same value. The price one day is 3,000, the next thing it's it's $150. You're like, oh my god, Google's only $150. It's still a $3,000 stock. They just changed the price. How did they change the price? By giving you more shares and just divide. So that's all the stock split is. If a $3,000 stock did a 3-to-1 split, if you bought one share today, you got one share. After the split, you got 3 shares worth 1,000, but you still got $3,000. But now you have more shares, so you got a little more freedom, a little more flexibility, a little more control. And here's the thing: forget all that. There's fractional investing, right? That's why I started this whole thing off talking about buying every single month. Because just the same way we buy gas, nobody goes to the gas pump and says, "Yo, give me 3.5 gallons." No, you say, "Give me $20, give me $15, right? Fill up." We buy based on dollar amounts. You can do that now. The technology has made it. It's really no excuses. If you got $20 a month to blow on something or 100, I know y'all blowing. We all wasting money on something. Something that legit could literally be in the market 10 years from now. Think about that for a second. Some like for real. Some of us have stuff we just don't need that we just love. It might be, I don't know, I don't get all your business. But if we went through your budget, we literally line item went through every single thing you've been buying for the last 6 months. If we could find an area of waste, something that you could say, yo, this isn't important. This isn't that. It's not building value. I don't need it. It's not serving me for real. I just whatever. I just want it. Okay, cool. Sacrifice, discipline. Put that money in the market. You'd be amazed at how much money you could make if you got really, really serious and gave this time. You'd be amazed. You'd be amazed. Oh, Amazon splits in May. Yeah, I thought it was May. And then I think Google is July. It's like July 15th. Christopher Johnson. I don't know why I say your whole name. Christopher said, I went in on Google, Amazon, and Shop. Oh, Shopify is splitting too. What's Shopify? Anybody know? Or when and what the split is on Shopify? Let me know. I mean, I could Google it real quick, but I'm trying to wrap up. Okay, let me see what else I got. Tesla, Microsoft. Oh, Tesla, Microsoft, Twitter. Tesla. Why people be saying Tesla? I'm like, stop being bougie. It's Tesla. Tesla. People always trying to differentiate, man. I hate bougie anything. I really do. Cause it's like you ain't no better than nobody else because you say words differently. Oh, look at Tesla, man. Ooh, look at Tesla since back to 2010. I should call it Tesla. Look at Tesla. All right, look at that. Matter of fact, let me go back. Let me go back a little bit. These candles look a lot different depending on right how you right. So first 3 years, Tesla was five. Oh, wait, why is it doing that? Tesla, y'all was like $3, $4. Can you imagine? Can you imagine buying Tesla at $3, $4? Once again, let's think about it like this. These are the year charts. Imagine if you just bought some every year, just January 1st. You said, man, it's a new year. Let me just buy some Tesla. I'm buying Tesla every year. Look at this. Higher, 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 higher. Ranging inside. What do I mean by ranging? I want y'all to see these ranges. They should stand out. These 2 months are inside of this candle. That's a range. We just didn't go anywhere. New high out of the range. All right. Next candle, kind of ranged again, right? So this candle ranged inside of this one. We just had an inside year. We didn't go anywhere. Okay, but we didn't drop. All right. 2019. Look at 2020. Oh my God. If you missed 2020, you probably feel like it's over with. It ain't over with. It's not over with, man. They gonna split. This price is gonna come down. It's gonna Jedi mind trick the whole world. Hopefully, if I'm predicting, Tesla will be able to produce more cars faster, yada yada. Just if it continues, right? If trajectory is a thing, it still has room to go. Like it ain't over. Oh, please don't think that. Man, 2022 or 2021, and here's 2022. All right, let's go to the month. Oh, and these are really big swings. All right, we talking about 1241 down to 700. All right, just in a was that 4 month period? How low is that? 43% off at these lows. 43%. 43. Where was COVID's low? The COVID low of 2020 was way back here. All right. So to retest COVID's pre-COVID high, we'd have to come all the way down here. Right. Because Tesla went up so much. So I don't like where we are right now. I mean, unfortunately on this month chart, I mean, y'all know me. I see this doji, but I also clearly see this. Now, this is month chart longer, right? So we pushed up, we hit 1200. We came back down to the low of the candle that made that move. Right? At very bullish month, which was October of last year. All right, we came back to test 700. We bounced back up, went to 1150. Couldn't get to 1200. Oh, looks like we probably coming back down to 700. These ranges are real easy. It's like all we do is go to the top and bottoms. And even here, when we started, like, let me draw a line real quick. Even like here, when we started to go up, all right, if I leave that line there and then I'm gonna do this, I'm gonna take this box off because I showed you that line, right? And you literally could have done this. Like you could have had this line here. Once like this month here did a doji. That's a high. Okay, we're ranging inside of these two candles. Right. So this low of October, you literally could have had on your chart since October. Right. Somewhere in here in February is when the VIX, godly, when the VIX spiked 221 that week. VIX went high. People started to buy. They bought Tesla. Tesla pushed back up. Did we get out of this range? No. And if I go to the week chart, look at that. Classic hammer candle is telling you I'm coming down. We pushed up again. Remember how I said at the beginning of this, I was like, the longer the wick, if the wick is real long and it's on the top, that means the other side, the people shorting it are probably about to win. Look at this bottom, long wick on the bottom, price pushed up right here, right? This hammer candle. Right? So what are we doing? We're just slowly probably coming on back on down to 760. And if I say 760, might as well look at really 700 to 760. That's a pretty wide range. That's $60, but it's Tesla, right? Tesla can move $60 in a day. So right now, yeah. Look at where we are. Look at that. Inside another. Look at that. So last week, look at this. This candle right here, and all we've done, we just inside that candle. We poked outside of it. So I be kind of looking to see, are we gonna get a bounce here? Like Monday's usually a bullish. Are we gonna try to get back up to 1,000? We don't get back anywhere up here, 960, 980 to 1,000. We going lower. That ain't, ain't hard stuff. Microsoft. Look at Microsoft. Super bullish. I don't even have to say it. Incredibly strong stock. Chart technically smoother than Apple. I know people, I'm definitely an Apple guy, so I don't mess with it. But I made some money on Microsoft. What was it, last year? I got into option, was trading some options on it for a second. I keep my list small, right? I only mess with really right now, two. Tesla and NASDAQ. The broad market index and the fast EV stock that can just make you, Tesla moves. You know how to handle it. So this is Microsoft. Month chart, kind of, same thing. These 2 months, kind of made that range. We keep testing the bottom of this range. We keep going down to 270, 275. And it looks like we just this month actually closed under. Finally, I hate to say finally, but finally, all this up and down, 350 back down to what is this, 270, 320, 270, 310, 270, 310. Back down to 370 again. What did I say about the ice? We keep tapping at a floor, of ice. These levels aren't they can't break, right? So it's like ice. It's not concrete. It's hard to break concrete. Ice, you keep hitting ice hard enough, anybody can break it. Right. So sitting there. So this has to be a good month. Like if May doesn't from the jump, then yeah, you already know what I'm about to say. The VIX has room to go up, which means all of these stocks have room to go lower. Right. And some are right there sitting at support right there. It's not looking good in the short term. Short term. Here's Twitter. You take all this off. Twitter on the year is this. I mean, I don't get it. I don't know why anybody's excited. Don't get me wrong. Let me take that back. I don't want nobody feel judged. I just never. I don't know. I just never got Twitter. So first year IPO'd here, 2013. Next year went lower. 2015 went lower. Found a bottom. 2016 and 2017 virtually had the same low. 2018, good push, real strong wick, but we stayed inside of that candle, right? So right in here, right? 2019 just ranged inside of 2018. We got to go higher or lower. Look at that. We touched the bottom. We actually came here. 2020, same exact thing. See what I'm saying? They all doing the same thing. We came down during COVID to hit the bottom of the previous year to find support. It's the same thing on all these different stocks. I'm telling you, man. If you took some time and just really you start to see the same stuff over and over. That's why I trust these patterns and the techniques that, traders learn and use. I don't know anything that's going to happen for a fact, but I know what's most probable. I know if this happens, then that will probably happen. That's all you can do as a trader. It's very educated guessing on some level, right? An earthquake, a war, CEO scandal, anything could change a stock overnight in an instant, in 5-10 minutes. All right, you can't control nothing. It's literally it's very, very educated guessing on some level. Long wick on 2021. 2022 is trying to give us a little. The month charts. Look at this. How much is this pullback? Looks like we pulled back. Sheesh. 62%. Right. Last few 2 months. Twitter got some help. Elon Musk bought Twitter, which they said they're about to take it private. Is that what's happening? I don't even know. I don't even pay attention. I literally, y'all, I know this is what I do, and some people probably think I should kind of know a little bit about everything. I really don't pay attention to the stuff that I personally don't. I've never cared about Twitter. I don't use Twitter. It'll be interesting. It's gonna be very interesting for me to see what Musk does with it. I'm real curious because for several reasons that I ain't gonna get into. I just never liked the stock. Never liked the company on a certain level. I actually was waiting on like a Facebook or somebody just to buy them. It's interesting that Elon Musk did it though. I knew somebody was gonna buy Twitter. A platform where you can post 144 or 140 characters. That's really it. That's the main. That's it. It's like I don't know if that's competitive advantage. I don't know if that's take over the world. You know what I mean? Type of innovation. So let's go here. Let's look at the day chart. Oh wait, I gotta go back. Look at the week. So we had a gap right here. Right, y'all see that gap? When price closes one week at 939 and the next week it's at 46, right? So we didn't kind of go through this area. Price can literally, market can close on Friday at $100 and open Monday at 150. And you didn't have time to like do anything from 100 to 150, right? Prices do that. Overnight, yeah. Over the weekend, right? When most retail folks can't do nothing, can't buy. So we might fill this gap. If we fill this gap, meaning come price comes back down to 38, then yeah, we right back into this weekly downtrend, which right now is trying to it's trying. We got one bar on the squeeze, bullish. But we gotta actually go higher, pull back a little bit, and then go higher that second time to really convince me that we're ready to actually start an uptrend on the week chart. We're not in an uptrend on a week chart. It's a real strong pushback. Some good news for Twitter happened this week. Okay, cool. But yeah. Go back to the month. Clean these charts. Oh. Okay. Oh. That noise is me. Let me put some music on for a second. That noise is me seeing new stocks being added to my list. It's 9:00. I told y'all, man, I'm trying to watch Ozark. Putting on the dark music. So what is this? Automotive? Let me see. Let me hit Yahoo Finance real quick. RE. What the heck do they do? I mean, I know it's automotive, so I know what they do. 237 million beta is a 5-year beta that they don't have. So it hasn't been around enough for me to tell y'all what its beta is. Comparison how fast this moves compared to the S&P. S&P is a standard of 1. If this had a beta of 1.5, it's 50%. The moves will be 50% bigger or right to the upside and downside. I don't have a beta because it hasn't been around 5 years. Profile, consumer cyclical, recreational vehicles, only 270 employees. Interesting. Operates in the e-mobility business. Company develops REE corner technology, which integrates vehicle drive components, including steering, braking, suspension, yada yada. And Arc of the Wheels company also develops reboard. Okay. Headquarters in Israel. Wow. Okay. So I still don't know what they do. So that's enough for me, right? If I'm like thinking in investor mode, somebody's like, yo, man, you should check out RE. I can't even tell y'all what the hell they do. And I just read it. Right. So further analysis, you got to dig deeper, but I keep stuff real simple. I don't know what they do, really. It sounded great, but I don't really know what y'all do. Clearly the trend is down. If I go to the year, these 2 years, we had a bad year and a worse year. All right. So if I go to the week is down. If I go to the day, in the day we've had a really nice, all right, so right now we in the like range, but everything's down. So I would expect us to go under one dot back down to $1.70. And these are those stocks. Sometimes I don't know who asked me about this. Let me see who asked me about this. These are stocks I kind of want y'all to stay away from on some level, because we look at them and we tend to look at the price and think, yo, but it's only $2. If it goes to just 10, that's a 500% return. Yeah, the math is beautiful, but the probability is not a strong company. It's just not. Right? Now maybe, right? I don't know. I don't know what you know. So, you know, as LeVar Burton used to say in Reading Rainbow, you ain't gotta take my word for it. But you are watching my show, all right, to get some information. So these are stocks I don't love. I don't love these. I think these are hopes. And maybe, you know, and if you're like, yo, I know something about the company, I know this, I work for them, A, B, and C, I believe in the technology, I see it. Okay, cool. Right? Cool. But you better know. You better have a very valid, several valid, very clear reasons for loving a stock like this. Because it's down. It's just nothing but down. Like it can't go no lower. Which I know. Then we start thinking, oh, it can't go any lower. Let me buy it. It has to make me money. Yeah, but what if we literally really it doesn't do anything for 3 to 5 years? You know how much money you miss waiting on stocks like these to blow, when the Apples, the Amazons, like those are still going to do what they're going to do. And there's probably another 200 mid cap quality stocks that their chart doesn't look like this, and their fundamental information, like the company, it's a strong company on paper. They're managing their debt, got good profit margins, they good earnings, seem to have a vision for the future, got some stuff in the works that makes sense. Yeah, it's business. It's business. I look at I look at stocks like this, and you know, I like these are price charts. We should call them quality charts, value charts. You change the word, you change the context, right? The Latin for credit is trust. So your credit score really is your trust score. You got a low credit score, you just not trustworthy. You don't pay your bills. Now you might have reasons, yeah, but at the core, for the most part, and I know several like credit guru folks, and you know, you want to clean your credit and get this off and all that. And I've done it before. Yeah, some stuff came off. But you know what? What over my lifetime has helped my credit the most? Paying my bills on time. Because that's what I told them I was going to do. And they trusted me. And credit scores go up. Right. So sometimes changing the word makes it a little different, right? Stop saying credit scores. Call it a trust score. Then it's personal. It's personal to your character then. Ooh. Right. So I kind of think of price charts as like value charts, right? You can see the value in a company or see the absence of value. So be careful with these, please. That's all I can say. That's all I can say. Be careful with these. That's all. Uh oh, Quave said he sent it to me earlier. CJ, what up, bro? He said Ozark final. Oh no, he said Ozark final trash. Okay, well, I mean that's cool. I still gotta watch it. And I've been pontificating, you know, I'm that type of dude. I want to think about what I would do if I was the writer. So, and I think series like that, Game of Thrones, what else is coming to an end? Snowfall has like one more season. It's like, oh, they don't always end how we want them to, but they gave us what we needed during the middle. The endings ain't always what we want. Sometimes they just make sense. I think Game of Thrones ending made perfect sense. John didn't want to be king. He never wanted to be king. Why he want to be king? Y'all wanted to make him. It should have ended with him being king because y'all just wanted to see him as king. He didn't want to be king. You got to respect the characters. So I ain't saying the end, but I'm gonna still watch it, of course. Let's see. Charles Holland. Charles said, "Look, last one, Hershey recession play, smiley face." Okay, last one. Oh, real quick. Um, If you need some help, limitlessclass.com. Feel free to DM me because you're probably watching this on Facebook. You know how to reach me. DM me. I got a couple classes. I teach a really good options class. It's about 8 weeks of content. Futures class, about 8 weeks of content. That's like 40 or 50 hours when you put it all together, which is required, right? To really learn, you know what I mean? To really get into this and learn it at a level that makes sense, right? You got to put the time in. So, limitlessclass.com. What was that? Oh, Hershey. What's that? S-H-S? I can't talk. H-S-Y. Good Lord. Okay. So if I go to the day, this is actually the year. All right. So the year, doing well. New high. Does not look like everything else we've looked at. Already, I'm like, Hershey look like this? That's pretty great. Remember what I told y'all about that? I want you to remember these little principles and things I give you, right? The statistic is very high percentage, over 80%. If a stock gets to 100, it's going to get to 200. Not like it's like an 85, 90% chance, right? We got to 100 and we strangled all that. I'm speaking of option language. We danced right here for 1, 2, 3, 4, 5, 6, 7, 8 years before. All right. Or another way of saying that is we had a range. Oh, pushed up to 120. Oh, came down, almost came back to that bottom. All right. This is called a breakout, classic breakout. And then 2020, when a recession happened, we went right back down, basically to test the top. Y'all see that? Let me take this box off. All right, so when COVID happened and we pushed all the way back down, all we did was push down to the top of what used to be a range. All right, that's all. Just pull back to the top. So, right, what used to be resistance, we couldn't go any higher. We got higher, it pulls back. Now that same area is support. Resistance becomes support. It's like you go to a new floor in a building. Well, the previous floor you were on, that ceiling is now the floor. You're at a higher level. All right. So let's see, month chart. It's cruising. What's up with Hershey? What the heck? What's going on with Hershey? What do I not know about Hershey's? This right here is the COVID candle. This is March of 2020. Man, these last 8 months, that's gangster. It's like, man, forget this economy. I'm gonna do my own thing. That's what Hershey's is saying right now. Forget this economy. Forget what y'all talking about. Forget inflation. Forget all that. I'm going up. I have no idea what they're doing. What the heck is Hershey doing? This is one of those stocks. As soon as I get off, I'm about to be reading articles on Hershey for the next 30, 40 minutes. No, I take that back. I'm about to watch Ozark. But yeah, I mean, you already know, bro. So great stock to look at. Thanks for giving it to me. Man, little pullback. It's very much so bullish. I'm like, why? Why? A little 5% pullback. That's nothing major. We probably gonna. You already know. I'd expect us to be at new highs pretty soon. Christopher said, "That's because everyone is eating chocolate, crying, watching the market go down." Damn, that's funny, but sometimes it's that's interesting. I'm gonna look it up. I'm gonna look it up and try to find out what the heck are they doing. What's going on? Try to figure it out. All right, so that's it, man. Thanks for rocking with me. You rocking with? I think I'm the world's greatest. I think I'm the universe's greatest, right? So can I say that? I say that I ain't trying to offend nobody else. When I talk about noble, everybody else disappear. That's how I was raised. My mom was a therapist. I got a different level of internal true value and self-esteem. All right, so I'm never being cocky or being like ego. I do think I legit have the best show that does this. All right. And my cousin. who I love to death, who got me into futures and changed my life. Yeah, man. We got the best shows out. We do. Can't nobody cover this stuff the way we do. So, my guy Charles said, man, talk your ish, bro. Yeah. With a name like Noble, I can't get too cocky. Y'all will pull me back real quick. Real quick. So thanks for watching. Go to YouTube, sign up for my YouTube channel. It's Being Noble. Go to Insider Trading, our group on Facebook. It's a great community of people. All races, all colors, mostly black folks. Getting it. There's a community. You got some support. You got educator you can learn from in me. You have somebody who really is a confidant. There's a difference between a constituent. A constituent believes what you believe, but they're not necessarily with you. A confidant is different. I try to be a confidant to people that come into our room, our safe space, our community that we started 10 years ago. And people that decide to put their hard-earned money and time, right, under my care. I really, it's an honor for people to rock with you from an educational standpoint, because there's just that thing of bestowing knowledge to somebody else, man. It's huge to me. There's a lot of honor in that. I take my job serious. I do. I love what I do. I love y'all. All y'all. So, Andre Swanson said 100. 100, always. Check your inbox while watching Ozarks. I will. I will. Look at that. Perfect. Music ended. I'm out. Share this video with somebody that you know and that you love who needs to seriously start thinking more about investing, trading, putting some building equity, building something so we can lead that next generation something. And have some fun while we're here. All day. All day. I just booked a trip to go back to Oyster Bay. Oyster Bay. That was probably terrible, but whatever. In Montego Bay. It was so beautiful. I'm going back. Looking at some more trips for the year. I gotta travel, man. I do travel, but you know. Brandon said, man, I appreciate you, Noble, for real. Definitely none but love for you, bro. Yeah, man, I appreciate that, bro. I appreciate that more than you know. Thanks for watching. I'm out. Enjoy your weekend. Be safe, be blessed. And check out Ozark. Peace. Oh, safe travels. Yeah, thanks, bro. I got some time. I got planning a few little things for the summer, but yeah, I'm always keeping it safe. I try to. So peace.